Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over a bunch of different ratios. That's again asset pricing against another asset, comparing it to history. What this tells us is what assets are cheap, what are expensive, how they're moving against each other. It can also tell us the market conditions that we're in, depending on which assets are outperforming other assets. And I do use this as an input to where to invest. So if something is cheap against a bunch of different assets, and I think that the fundamentals are still good, or the fundamentals haven't changed, but we've seen a short-term problem in the market, that is an opportunity to be accumulating assets in that asset category. So we're going to dive in here. There's going to be a lot of precious metals, stocks, and some commodities in this clip here. So again, if you need any help with anything, identifying the sectors, identifying specific companies, definitely check out finding-value.com. We are going through the platinum question and answer session at this moment as you're watching this. It's Saturday, 7 a.m. So if you're a platinum member, go jump over there on the call and ask whatever questions you have. So let's dive in. Let's take a look and see what's going on. I'm going to start with the platinum to gold ratio and then work our way through. And again, the market conditions are what are determining the movements of the up and down of these ratios. So this was the inflationary environment. This is the disinflationary environment. And then this is the marking of the bottom where I've got this little price label. And I think that we are going to work our way higher over time. It doesn't mean we go straight higher. You can see here recently that we've been we had a breakout. We've been grinding on the upper trend line. And it looks like to me that we could potentially move on higher where platinum would outperform gold under the market conditions that are hopefully coming right ahead of us. So if we zoom in on the dailies, you can see we've had a massive outperformance here the past few trading days. And I do think platinum is looking good for hopefully an outperformance against gold. Again, we are at a very cheap level, an anomaly level in history at 0.52, where we have not seen levels this cheap in history before. So I think it's a historic buying opportunity for platinum against gold. Platinum is also cheap against all of the other metals that we can measure it by. It's cheap against palladium still. I used to own palladium. I purchased it up in this region up here, thinking that palladium was cheap. Wrote it all the way back down to April of 2020. And the reason I swapped it in April of 2020 is because we had the capitulation bottom in March and things seemed to be getting better. So I bought into that strength in April. I knew that the ratio was at a historic low, and I swapped all of my palladium for platinum at a ratio of like 0.35 or 0.38 or whatever it was at that exact time. So I got well over 2.5 times the platinum ounces for one palladium ounce down at that time frame. It is still incredibly cheap. It is working its way higher. We're at 0.7. I've basically doubled my wealth in platinum versus palladium. I could swap my platinum back and get 2 times the amount of palladium that I did when I swapped it back at 0.35. So I'm already have a double, and I don't even think we've moved that much. Historically speaking, an average is around 2.5. So we have a long way to go higher where platinum could outperform palladium for whatever reasons those are in the market. It could be substitution, it could be market conditions, it could be inflation. There's a bunch of different things that could happen. And we have got, it could be hydrogen fuel cells and the increased demand for platinum. But it's still incredibly cheap, still looks good, and it's improving for platinum. Platinum versus silver, this is indicating that platinum is cheap against silver. We also have a falling wedge. We've tightened up into this corner. We had a little breakout here, and we are coming and kind of meandering past this area here. And recently, we can see the past 2 trading days, it's been trading higher. Silver is really good in a fear type environment. Platinum is better in an inflationary type environment. Maybe we have an inflationary thing coming up here recently where platinum rips it. Fingers crossed. And then when that cycle matures and the inflation slows down, and then the fear comes in the market and interest rates start to roll over, silver is generally the spot to be. Hopefully that's something that comes up, is an inflationary environment. Platinum outperforms silver in the short term. I can swap my holdings into silver at a ratio above 120. So something like in this period here, get 120, 130, 140 ounces per my 1 ounce of platinum and absolutely destroy it on the returns side. Again, this has protection against inflation or deflation, and when these are cheap against other assets, you're going to be outperforming other assets. Gold to silver ratio, we've been breaking to the downside of this. So let's back out and just show you kind of big picture view. I think this is kind of like a top. There's another top. Perhaps we have another shoulder here that has created, and we just have a weird or non-existent neckline, but we've got three kind of humps here, distinct humps. If you zoom in on the right-hand side to the dailies here, you can see that we've got a rollover and an outperformance of silver outperforming gold. That's why the ratio is contracting. Things don't move in a straight line. We've had a pretty big move here in silver outperforming gold. So again, I'm not looking for this to go straight lower, but I do think it's going to work its way lower, grinding on down over the long term, where silver is going to outperform gold. We've got palladium versus silver. Big picture view, you can see that we've had a vast outperformance of silver over time. Where you want to accumulate silver are these peaks, and you do not want to be holding palladium. You want to be holding silver at those times. This would be a huge outperformance of silver into that. I think we're going to get another huge outperformance of silver over this long period of time, and hopefully we get a big compression down to below 20. Here's 19 there and 14 and a half there, just to let you know. Dow Jones, so this is stocks in relationship to gold. Big picture view here, if you look at it from a very long-term view, the Federal Reserve was implemented here, and you can see that the volatility of the Dow Jones to gold ratio has actually amplified since the Fed Reserve has went into power. They are actually creating boom and bust cycles, which is great for investors if you can identify where you are in the cycle. And I do think over time, this is going to compress lower, where we get an outperformance of gold over stocks. The reason I think that is because under inflationary environments, under increasing interest rate environments, gold and precious metals outperform stocks because stocks get repriced lower to lower price to earnings ratios. We've got gold to Dow Jones, so I flipped the two so everyone can see it in a different viewpoint, flipping this, and you can see the big cycles for gold. And this is a little mini cycle, and I think we're going to break and create a gigantic cycle, much like 1929 to 32, and much like 1970 or late 60s, all the way to 1979. So I do think that's coming. We have basically come up to a tip, and we've broken to the upside of that ratio where gold could outperform the Dow Jones. This is a gold to oil ratio. I know we've got still a very cheap ratio for oil. Oil is cheap at 24, so 1 ounce of gold could buy 24 barrels of oil. And that is still incredibly cheap, and we are moving our way down lower where oil could outperform gold. So that's good, and let's hope that momentum can continue. That's looking pretty good for crude oil. Crude oil versus natural gas. Natural gas is incredibly cheap here. We're at a ratio of 39. 39 is the second, probably at least the second cheapest time in history going back to 1990. Very cheap. This could be considered maybe a potential double top, and then we roll on down with this ratio. Remember, crude oil is cheap to gold, and natural gas is cheap to crude oil. So natural gas, I think, is definitely one of the cheapest assets in this mix. Platinum and natural gas. And natural gas is cheap to platinum too. Maybe we can do that at the end. So natural gas definitely looks really good. Crude oil versus gold. What I did is it's not a gold to oil ratio, it's an oil to gold ratio. I flipped it. You can see that crude oil was outperforming here, underperforming here, and then we were coming and broke out of this falling wedge where I think we're going to have an outperformance of crude oil versus gold on a long-term perspective. So that looks very healthy for crude oil and a potential move higher in crude oil. Crude oil versus the Dow Jones Industrial Average, so crude oil versus stocks, we're looking at a whole bunch of different things. We are at a very cheap valuation for crude oil. And if we zoom in, we can see that we're getting some outperformance of crude oil, and hopefully we can get a break on higher against stocks. So either stocks go down or crude oil goes up, or both of those things happen simultaneously where you increase your purchasing power against stocks. Dow Jones versus crude oil, I just flipped them so you can see it. Last bull market, you can see that we peaked out. We also had another peak there, and then we ran all the way down to a ratio of about 6.5 to 1. We've got that same scenario where we peaked out, and then we're going to peak out again, and then I think we're going to run down all the way to something below 10 or 8 or wherever it ends up being. Dow Jones to natural gas. Now, this guy is crazy, in my opinion. We've been getting crazier and crazier swings with time over history here, and we're at objectively incredibly cheap valuations for natural gas against other assets. In fact, I don't even know. I haven't seen valuations this cheap ever. So natural gas, I think, is a huge opportunity for potential investment for the patient investor that can wait and ride this thing to the downside. Looking at TLT versus gold, gold just basically had the shellacking to bonds prices, another rollover, and it looks like we're going to continue lower. I don't know why you'd be in bonds. I'd rather be in gold when looking at this chart. Gold versus TLT reversed. So this is what it looks like from the reversed aspect. Gigantic bull market, the consolidation zone, the breakout of the double bottom base, and we are moving higher, and we've got new all-time highs against the bond market, and we're probably going to see that continue for gold outperforming bonds. We've got natural gas versus the Dow Jones, so I flipped those as well. You can see an underperformance of natural gas, an outperformance, an underperformance, and the fractals of this performance here is the same as what's happening here. I do think that this area is this area. We've got a retest on it. Natural gas looks absolutely fantastic against other asset classes. This is one I would be looking at for potential investment. This is copper versus gold. Copper is of very short inventory levels. We're running deficits. This is a flag pattern where it usually continues down, but we've seen pretty strong movements in this ratio recently, where copper's been outperforming gold, although gold's been doing very well. So we could see this hopefully break back above this resistance line and resume that uptrend where copper would outperform gold. And that could happen. The inventory levels are incredibly tight in copper. And then we have the Baltic Dry Index versus gold itself. Again, we had an outperformance of the Baltic Dry Index during this period. We've been in a gigantic bear market for the Baltic Dry Index recently. And what we need to do is we've kind of broken out. We had a kind of a failing type move here, and we're starting to try to move to the upside of this ratio here. So we might come back down and have one last kind of puke. It looks like this could puke one last time before trying to move on higher for the Baltic Dry Index. So that's what I've got for today, guys. All of these different commodities. Oh, let's do the one last commodity here real quick. We'll do platinum divided by natural gas. So this is platinum divided by natural gas. You can see this thing coming all the way up here, which means natural gas is cheap to platinum. So natural gas is actually, bar none, the most undervalued commodity in the world at this moment. And if I were to flip this, just so you guys can see it from the other, this is natural gas versus platinum. You can see how cheap natural gas is. Now, also keep in mind here that we've got kind of this increasing kind of wedge thing going on here as well in this ratio, and we are at a very low level, right at support. I don't know if natural gas can go much cheaper. I mean, it always can go a little bit cheaper, but it is at a very cheap ratio. It's very cheap right now. I am very interested in natural gas at this moment. And then we're going to have to start looking at the charts, and I'm going to do that with the Platinum members at looking at opportunities in the market and give you guys what my opinions are around the natural gas companies, especially my favorite ones. So that's what I've got for today, guys. Natural gas and platinum are the two winners, in my opinion. Crude oil, I think, is also a winner. Another thing you want to look at is just not the valuations, but also the deficits coming up. We've got some serious deficits in the markets coming up, and inventories are going to be drawn down to very critical levels. Some of them already at critical levels. For instance, copper's at critical level. It is very low, and we're drawing it down. The thing that could stop that is a demand destruction event. Something where demand gets destroyed in the markets, and the markets roll over and have a recession or some sort of problem or credit problem in the markets. That could impact what we're seeing because it just destroys the demand. But are we going to get that? I don't know. I don't know if the banking system's that sick. Maybe it is, and maybe there is some sort of problem in the market that can basically roll these things over. But at this time, with the current demand and where the inventory levels are at, copper, aluminum, even platinum, gold, silver, all these types of metals, I think could do very well as long as the demand does not get destroyed. I've been watching yields and the relationship of the 10-year and 30-year yield. Sometimes those give, or the 3 and 10, 2 and 10s, whatever it is. Those also give indications of what could potentially come. We have had a large sell-off in March to the downside. We could be putting in a kind of a shoulder, head, shoulder, which I go over the daily technical analysis, where we could maybe head lower 3, 4, 5 months from now. It's possible, or sooner, whenever that does happen. But in that case, I would think that precious metals would do well. They generally do well when that yield curve uninverts. That's a market condition that's favorable for that. And some of the other ones may lag or go sideways or go down some because of the demand that would be destroyed in that type of fear environment. All right, guys, that's what I've got. Hopefully these have helped you further delineate where to look in the markets. Give me a thumb up for the content, subscribe to the channel, and we'll catch you guys later. This is Finding Value.